What's up, guys? We just finished these beers, and we were talking about what?
Bank fees.
Bank fees. Bank fees make my blood boil. There is no reason to be charged all this crap.
Yeah.
So towards the middle, the end, we get into the stories, but there's tips, actionable tips, and maybe some links below to some stuff. So we're gonna get into it right now.
Yeah. Actually, one of the only things I've ever seen you really get upset for over the phone.
Oh yeah.
Is bank fees.
Yeah, I pay the bank like $15,000 to $20,000, $25,000 a month in interest, but I'll be upset over a $3 bank fee. That's livid. Because the other one I'm strategically paying interest, but a $3 fee, fuck
That's
that.
bullshit.
That is bullshit. We'll get to it right now. Welcome back to the FU Money Podcast. FU Dane.
FU Hugh.
Cheers.
Cheers.
We are back at 4x4 Brewing with hopefully better sound and better picture quality. Sorry for the last 2 episodes. We might refilm them in the future. Let us know if you want them. The audio is a little hollow, so sorry about that in advance.
Working on it one step at a time.
What are we talking about today, Dane?
Today we're going to talk about bank fees.
Bank fees. Ooh.
It's the best topic. It's
Banks
so
don't
fun.
charge you fees. What are you talking about? You put your money there and everything's happy, hunky-dory.
Yeah, that used to be until everything kind of changed and inflation started to sneak up.
So bank's job, and for those of you who don't know how banks work, and a lot of us have never really put the time to think about it. So a bank makes money off the people that are putting money in there in 2 ways. The first is by generating fees and charging the people to store the money, that's predominantly what we're talking about today. And the second way is by lending that money to the general public in the form of loans. And that's really where I like to generate my money, is I owe the bank like $4 million or something.
That's a lot.
I pay them many thousands of dollars every month. But I don't like paying a $5 not sufficient funds fee. That pisses me off, even though I'm paying them like $26,000 a month or something crazy like that.
So what would be the reason that we would want to create an entire episode on bank fees?
I think there's a lot of misinformation and a lot of people just aren't paying attention. So this, over the course of a year, could add up to $300 to $500 to $1,000 in just fees that should not exist. So I'm going to give very concrete and direct examples. By the end of this, you should be able to do an audit on your bank, no matter when this is in the future. And, we're going to talk some high level stuff on other banks that have been caught doing naughty things.
Yeah. Well, this is also important for 2 reasons. One, I can't tell you how many times I've been sitting in a room with you and a very high level banker going over a loan that was all approved. All the paperwork was good. They have their whole team and legal look over it. And he was like, this doesn't look right. Wait, what about this? And almost got charged, not like several hundred, but several $1,000s over what you should be charged. Now you fast forward that would have probably equaled dozens of thousands of dollars in a 10 to 15 year period.
Right.
So you have to, not all banks check. It's not that they don't cross the T's and dot the I's. It's you should do your due diligence as a customer of any banking institution to look through the details. And I was always impressed by that. And the second thing is your bank and you are creating a relationship. In the beginning, you're going to be a peon to these financial institutions, but as you go, bankers who know you, trust you, like you, will start doing special things for you that they don't do for the common everyday person.
Within the law.
Yeah, legally. And they have the ability to do so. They can customize lending terms. They can shift things around to leverage more of your assets in a different way. We can talk about at some future episodes, swaps and other programs. And
on the lending side, they can do an infinite amount of things.
Absolutely.
But today we're not talking about that. We're talking about the normal side. When normal people think about the bank, right? You get a paycheck and it goes somewhere. It's probably going to a bank if it's direct deposited.
Yeah.
That's the bank we're talking about, that side of things. So it's crazy. But yeah, I mean, to point out what Dane was saying, the thing he was talking about was like $2,200 or $2,400, $2,400. And let's just take it, if I just didn't spend that $2,000 because I caught it, we can say on the nice side of things, banks are also full of humans and humans make mistakes.
Yeah.
But on the other side of things, you can say banks are evil and they're out to get you. The truth is somewhere in between. But I mean, even that $2,400, I mean, that's a car payment or it's rent for a lot of people.
It's a mortgage.
It's 2 months of rent for some people, depending on where you're at in the world or country. So there's that. So we're going to back this up a little bit. And I'm not going to try to give dates because I don't know them, but we're going to go back in time a little bit to the 1920s, I think. Anyways, someone's
back in time.
If I'm wrong, you'd let me know in the comments because it helps the algorithm or whatever. But there's something called the Glass-Steagall Act. And the Glass-Steagall Act was abolished by Clinton, the Monica Lewinsky Clinton, and in the 90s. And the Glass-Steagall Act basically forced the banks to be separated, which is the front end, the banking side that collects your money, and the lending side are not allowed to be the same team and interaction. In the 1990s, Clinton abolished that, which led to 2008, but we won't get there, right? Really, it was Carter's fault. But if we go further back, there's two sides to a bank. Most people don't realize or think about it. I didn't know until very recently, like when I started investing. There's the lending side of the bank, and then there's the banking side of the bank. And today we're here to talk about just the banking side. And yeah, I don't know. You guys hear about it from notable things. Dane, off the top of your head, can you think of any banks that have gotten in trouble in the last 5-10 years?
Naughty banks.
Over just charging fees.
I'm pretty sure it wasn't a U.S. bank. And I know Wells Fargo has been there several times.
Let's talk about Wells Fargo. What was going on with that? I know.
Finally, I get my revenge. No, I was burned by Wells Fargo years ago when they were setting up fake bank accounts. And they were using those bank accounts to lend money. And also they would get premiums for opening several bank accounts in someone's name. And it was this big lawsuit and people made hundreds of millions of dollars. And by the time it got back to me, who was affected by the actual fraud, they sent me $172 11 years after the filings.
Yeah. So for those of you that aren't aware of this, this happened maybe in the mid 2010s. And I think Dane and I must have just met back in 2013, 2014, right when this was going on. But basically what had happened was Wells Fargo was opening multiple accounts, but you as the user, you couldn't tell that. And then when they would charge you fees, they'd hit you with a fee on every account, but you didn't know. And so they got caught and fined. But I think the fine was negligible compared to how much money they made in the meantime. But it lost their credibility, which is a shame because Wells Fargo historically has been one of the best banks out there. And who knows what happened to change that. I'll give one. So we'll just start. Banks charge fees. It's not cool beans.
Which is not cool beans.
Which is a 90s term. But what are some fees that banks normally charge us?
I mean, everything from transaction fees to if your account drops into the negative for a second.
Not sufficient funds fee, okay.
Those ones, bounce check fees.
Okay.
And then transfer fees.
Transfer fees.
Not to mention money wiring fees.
Wiring fees.
Monthly account fees for just operational costs. Not every bank is free checking, believe it or not. That's a newer thing.
Right. So monthly fees for just having an account.
Yes.
What else?
Fees because they have fees. No, I don't know.
Fees because of fees. Maybe they don't have some.
I mean, there are so many that you see if you look at your bank statement. Is that $2.99 thing? And you can just go down the list. There is a large amount of, they are fee-based institution.
What I really don't like about banks is even, let's say you never, ever, ever borrow money from a bank, which I'm going to recommend against that. I'm going to recommend you use the bank's money. But we'll get into that in future episodes. Even if you never are someone who does that and you just keep your money in the bank, which is your grandma, your aunt, your uncle, all that stuff, right? Those fees that they're trying to make off of you are BS, in my opinion, because that bank is going to make money by lending it, right? That you might store your money in the bank, and then that bank is going to lend the money to someone like me who's going to go buy an apartment complex. And they're going to make thousands and thousands, hundreds of thousands of dollars off of interest in me over the lifetime of that loan. Yep. And they'll also get their money back because they sell the loans off here and there. That's, again, we can get into that later. But banks should be making money on that side. I don't like the fee side, and hopefully we can give you some ammunition on what to check for and what to do. But Dane highlighted tons of really big fees right there.
Well, and here's the deal. We want to, again, deliver value quickly. And the fact is, you don't have to pay all these fees because not every bank is created equal. What are some options that people would have if they're unaware that they're being charged these type of fees, which nobody likes? What would be a better solution?
I'm gonna say that most banks are garbage, and especially any bank that you specifically know of that's not a local bank.
We just ended up on a hit list.
Yeah. And so here's what I mean by this. So this are your big national banks. So this is going to be your Bank of America, your Wells Fargo, Chase Bank, US Bank. These big mega banks, They deal with massive institutional money, and you will, I don't care if you're 100 millionaire, you'll never be big enough to them to ever get any kind of treatment that's favorable, or they're just always going to act against your interest. And they're so big, there's so much red tape and so many regulations that stuff can slip through the cracks on the bad side of things. And then people can also do nefarious stuff like the Wells Fargo side. And so a rule of thumb is the larger the bank is, the more likely you are to be completely screwed over. I'll give you an example. One of our investors banks with Bank of America, my bad. And Bank of America charged them $3 to transfer money to our local bank for a transaction fee. It's ACH, it takes 3 days. That's free for many, many banks. And they charged her $3. Well, I was like, listen, just pay me, 50 grand for this part of the renovation. And then later we're going to do another 50 grand for this other part of the renovation, another 50 grand for this other part of the renovation. And at the size of scale that they were working at, just for you as a normal person at home in the United States in 2024, think of that more like $3,000. Hey, pay me 3 grand to do some things. It's a lot of money, but it's not an insane amount because remember, this is all debt-based. Okay, so she was like, no, I'm just going to pay you $150,000 because they charge me a $3 fee each time. And that blew me away that here you are, $100,000 in there, and then they're going to charge you $3. Now, here's the crazy thing. They're doing this for everybody. It should be a 3-day period for an ACH transfer. It took 8 days to get to us, and they charged her a fee. So they charged her the $3. Think about how big Bank of America is.
Yep, huge.
It's massive. If you're watching this on video right now, it's popping up on the screen. However large I don't know if that's publicly available. They're charging $3 for every transaction like that. That's probably millions of dollars a month.
A day. Think of how many transfers happen and the size and scope in which they operate. They're probably making hundreds of thousands, if not $1 million or more a day in just transaction fees or transfer fees.
Now, here's the crazy thing. 3-day ACH transfer. It should take 3 days to get from bank A to bank B, and it's in your account, right? If you're transferring to Fidelity or Vanguard for a mortgage company, it should take 3 days to get from bank A to bank B. It took 8 days for her. Okay, let's think back. Why do you have your money in a savings account?
Well, so that it's safe.
Okay, so that's safe.
So that you can get to it when you want it.
Or a high yield savings account. What's that?
Well, it's kind of a joke. It's a play on terms, but at the end of the day, it's supposed to be generating you 1% to 2% on your money. So it's growing as they're holding on to your money. So
the day that they initiate the transfer, they now have to cease paying that investor the percentage, and they hang on to the money for an extra 5 days.
Yeah.
And then when the money finally gets there. Now, again, Bank of America is a gigantic bank. There's hundreds of billions of dollars transacted a day. And if they get an extra 5 days interest free to hang on to it due to policies, then they're just making money because they're not paying that interest. Even though the interest, Dana was just talking about it, the interest is laughable.
Yeah.
What we make from it. So high yield doesn't really mean high yield, but still.
I look at situations like this and I think, why did we ever stop hiding money under our mattress? And just like all things, milk, for example, there was a political push to say, hey, your money is safer in a bank. 1, banks are regulated. 2, you're less likely to get robbed other than by the bank. 3, you then have something safe that can send money to other banks and they all play nice. Right. Well, fast forward that to the future in which you live. Banks are almost more predatory and more, self-serving, where like my grandpa used to joke about it, and it wasn't on our mattress, it was in his own safe, but he's like, not a GDM person is going to tell me where to put my money and what to do with it and ask me what I'm going to do with it. And he just controlled his money. He didn't make any high yield savings on it, but the man always had cash when he wanted it. And he never, ever had to worry about fees because it was his money.
Right. And this kind of brings us to the next point. And I want to kind of build off of that because that's a great story. So your grandpa with the money in the safe or money on the mattress. I was just reading a Reddit post on personal finance, and they were going through the grandma's house. She had just passed away, and she had hid something like 40 or 80,000 pesos in money under her mattress. Seriously hid it. Yeah. And whatever the amount was a significant amount for the time when her grandmother was alive. Well, in today's dollar, it was worth like $50 or 20, 25, something negligible, right? And if I can find the post, I'll link to it below. But basically, whether it was under the mattress or in a bank with a high yield savings, it's getting eroded away by inflation. And that was due to policies, I think they knocked a zero off the peso a while back, so that the money actually became worthless. But if your money's not in an investment account and it's investing and growing, or your money's not tied up in a physical thing, then your money doesn't really exist. So I know we're getting a little philosophical, but we're going to teach you like what that means. Like, you're out there as a business owner working your butt off, as an employee working your butt off. You're a contractor, you're sweating, you're out there. At the end of the day, you're working for money, but really it's not money that you're working for. You're working for what money can do for you. And so to lose it in bank fees is just infuriating.
Man, I've paid so many over the years.
Okay, so what should you do if all these big banks are out to get you, it seems?
I mean, for me, I switched to a credit union or a local bank that made sense. There's even though national online banks that like eliminate almost 90% of the fees.
Can you tell me what the difference between a credit union is versus a bank?
No. I knew it once.
Neither can I. No.
Heard about what it was at one time.
The short answer is they're regulated differently. A credit union, when you enter a credit union and you have an account with the credit union,
you have to be a member.
You are a member of the union as if you are an owner. So usually credit unions are local. I think Navy Federal Credit Union is one of the biggest ones I know of that's a national.
Great credit union, some other ones. Way.
And then banks are just different. You are just a person that uses a bank versus you're a member of the credit union. And so your interests are more aligned with a credit union. Mm-hmm. So the likelihood, not saying it's impossible, but the likelihood you're going to get screwed over is less because they'd be screwing over their own members, and their members are the board, right? They are their own members.
Yeah. And it is more intimate. I mean, I've used credit unions for years, and don't get me wrong, I've used big banks. My brother works for one of the largest banks in the world. At the end of the day, there's pros and cons to all, but your everyday public banking, it's been much more favorable and easy to work with someone who's local, someone you have a membership relationship with. And I would say I've probably saved thousands of dollars in fees because of the relationship, not just because they had eliminated a lot of the fees from the way they operate, but they were more willing to reverse even the fees that were associated with certain things along the way, where a big bank would be like, yeah, no, sorry, that's not going to happen.
Right. So yeah, credit unions, your interests are more aligned. These big banks, what are some of the big banks that are out there that maybe people have heard of, maybe they haven't, maybe they don't exist by the time you listen to this? What are some of those banks that have a lot less fees, and why, or why might they?
So you're talking about the online banks?
Yeah.
Well, one, you mentioned Navy Fed, which is a credit union, but it's so large because it's one of the military's largest banks. It's a bank we've used personally, and I find one of the best banking institutions I've come across. Outside of that, you have USAA.
USAA.
Yep, that one's changed a lot. So what once I think was very great about it, I've noticed things aren't the same.
They're okay.
Yeah, they've kind of become very okay. And then there was another big it's not Capital One. Ally. That's the one. And that one's really, really great when it comes to caring about the members, eliminating fees, and working as a bank should run.
And I don't know, maybe that's just good marketing that they got through to you. I'm a little bit more sinister on the way I think about things, but I don't know that they're like, they care about you as a member, right? USAA, serve the military, whatever. But the online banks, banking is hyper competitive. And if you're just an online bank, you don't have a building.
Yeah.
You don't have thousands of jobs. You don't have brick and mortar stores that rent your mortgages.
Yeah.
You don't have electric bills and water bills tied to that. They are more competitive because they don't have to make as much. Mm-hmm. And so like USAA, used to like using an ATM. ATMs are
reverse all the fees.
They reverse all the fees up to X amount.
Yeah.
So I wouldn't care if it said it's a $5 ATM charge.
Yep.
Normally, if you go to an ATM and it's outside of your bank, that ATM will charge you money, and then your bank will charge you money. Yeah. So you're losing on both ends. And USAA would refund that. So they wouldn't charge you to use an outside of the network ATM, and then you would get reimbursed to some X amount, which was huge.
It was awesome.
Other fees, minimum balance fees. So a lot of savings account will have these, but some checking accounts will have them.
Yeah.
Or if you don't transfer X dollars in it per month.
Yeah.
So I have one bank that I use, and it's my bank that I don't really have a login for. So I have to like go into the bank, but money is there, so I don't get to it. So if I'm getting to it, it's super duper emergency. And so I have an auto transfer where it'll take money from moving it from account A. It'll move $1 at the beginning of every month to account B. 2 days later, it'll move money from account B, $1 to account. Anyways, at the end of the month, that ends up back in the same account. But because those transactions aren't occurring, the account doesn't get active. It just keeps it active, so I don't think it closed.
Well, and to your point, you have to play the game. And all these institutions and the government plays a big part in that, and federal regulation. You have to play a lot of games to keep your accounts active, unless you're just an everyday person who's going to use a checking for some basic spending and a saving to put some savings away. Yeah. But as you move into the investment game, you have to get smart with banks, bank systems, bank fees, and understand where you're winning and where you're losing. And one of which you always lose is working with a bank that charges you to do every single thing, which is why I no longer use any of the big banks.
Yeah. So start from now on, we're going to give you some tips and tricks that we know, and we'll update this in the future if there's significant differences. But if you work with a local bank or local credit union, first off, if you work with a credit union, there's a lot less chance that you're going to get screwed over. Yeah. But if you work with your local bank, here we use Old Missouri Bank, but also if you use, Ozark Bank, or if you use Great Southern Bank, these regional or smaller banks that are to your network, usually they'll have a lot more leeway, and you're going to be a lot less. They have less overhead, so they charge you less, and they work with you more. So, first one is work with local.
Absolutely.
Second one, tip 2, make sure you know what your minimum balance are. Right? I still have some balance transfers. If I drop below $1,000 for 1 second in some of my accounts, then I automatically charge a $10 fee. That pisses me off. That's upsetting. Yeah. And so I'll have a trigger that sets up that it basically doesn't allow that. Yeah. Another one, just ask. This is a big one. I do this all the time. Do not be bashful. Ask for a refund. If you have a credit card company also, ask for a refund. Hey, I had this fee. Can you go ahead and reimburse me for that? Mm-hmm. Hey, I had a not sufficient funds transfer. I'm so sorry. I wasn't paying attention. Could I be reimbursed for that? A lot of times these customer service agents, they are not legally allowed or by their policy to offer that information.
Right. So you have to make up a good excuse.
But if you ask them, they could do it.
They do it all the time.
But they can't tell you about it. Yeah. So just don't be afraid to ask.
Yeah. I would say the pro tip for me is start developing a relationship with a banker. This whole podcast is how you leverage not only your money, but your relationships, because that creates a great investor. Every time that we have spent the time to show up, say hello, build kind of like the warm and fuzzies, get to know the bankers at different levels. So now we only work pretty much with the president of the bank, where he's become kind of our personal lender, takes time invested into that relationship. And I know for a fact that there's been many times where, since as a business, there's 87 accounts I joke about, but
we have 87 bank accounts.
Yeah, lots of bank accounts. And with all those moving parts, there's been times where a few of those have gone into the negative, and we'll see a few of those fees pop up. Now they're nominal because they're a good bank. At the end of the day, it's still not fun to see a bunch of fees for an account that you really weren't paying much attention to. And Hugh or I will send a personal text to that person who runs and operates or makes the decisions, and we say, hey, we noticed all these fees. Can we get those waived? Because they know us, they like us, they trust us. We make that bank a lot of money. They give us a lot of money. They said, of course, no problem. And they've waived countless fees. It
doesn't work every time, but if you're every week asking them.
No, this is like truly
once a month, once every 2 months.
Those times where we just didn't move the money fast enough, or we were in the middle of something and forgot. They were more than helpful. And that's what I call a truly great credit union or bank. Their relationship means more to them than a transaction fee. Yeah.
And so many local institutions are going to be better. So think local if you're going to go for a bank, even though they don't have the best. Like I remember a lot of people are very upset with me when I'm interacting with investors that invest with us. And they'll be like, I'm trying to do this, I'm trying to do that. And your bank, being a local bank, their software doesn't talk to this fancy software. Yes, that's true, but we value the relationship more than that. Okay, another tip, pay attention. Just be aware. A lot of people were never asking, never knew to ask, right? When we get hit with it's a nominal fee, it's $35 if you go non-sufficient funds, and then it's $3 a day until you fix it. but I'm not getting emailed on that. So I might check in and be like, oh crap, this is 2 weeks behind. So it's $35 times 3 times 14. That's a lot of money behind. And that's not cool. But if I were paying attention, that wouldn't have happened.
Yeah. Yeah.
One more big one is don't be in a hurry. So let's think, I don't know, a lot of people, if you're younger, you're used to working with Venmo or PayPal, and there's the instant transfer to your bank for a fee, 50 cents.
Yep.
I never
It's
select
1% or something.
I'm like, yeah, I'll 3 days is free. I'm just going to wait for the free one. If I am managing things enough, then I'm going to make sure that I should never get into this, like, I need money now situation, because I'm paying attention.
Yeah.
So if I'm in less of a rush, less of a hurry, then that's a big deal.
It is a good one. I'm always tempted to hit that button and I'm like, why do I need it to be right now? Right. And then I slow it down. And then I realize that the process is usually the same day or the next day anyway.
And if you need right now instant transfer to your bank, like that's what a credit card is for. And if you're responsible enough, which is going to be 40% of the people that are in the United States.
Yeah.
But everyone has a credit card, but you instantly do the thing, but 3 or 4 days later, you just pay the card off in full, whatever the thing you need, if you need that, right? So,
well, and one of the last things I'll add is let's equate this into real talk and real life examples. That bank fee of $35, how often do we cruise up to 4x4?
Once a week.
Once a week at least. And how much is a few beers?
That's $6 a beer. So,
and we drink probably 2 or 3 when we stop in. That one bank fee just paid for our casual afternoon filming a podcast. And then you add on other little fees. And again, that's pretty nominal for our bank. You switch to a big bank and they'll start tacking on fee after fee. You're talking about lunches with friends. You're talking about an evening out with your spouse or partner. You're talking about beers. There's a lot of things that I would rather pay for than fees.
Right. $35. It's like shit. You got hit with that, but it's okay. Like, no, it's unnecessary, and you can do better by shopping around. So,
I'm curious. Do you know why they chose $35 or their $39 or whatever it is at each bank by bank? Do you know how they get that figure? They spend millions of dollars doing psychological research, what they can collect without making people lose their shit. Right. Over and over and over.
They're like, oh, it's just $35. $35? That's a half gallon of gas.
Yeah. But the average person will be like, that really makes me mad, but it's not enough to lose it or cancel, like pull all their money out and find a new bank.
And so for you and me, $35 is, like you said, it's a beers or going out. But like for some people, it's like, that's groceries for the week. I've got 8 kids. I was talking to a lady today and she had 8 kids.
A lot.
Oh my gosh, that's a lot. So she's going to be
a lot of macaroni.
Doing that really is going to stretch a lot further. Yeah. So there's that. Any last parting words for our listeners?
I think, and we talked about this on another episode, have some cash on hand that is available that you're not going to get fees for, that you're not going to get tagged for. Be responsible enough to have a safe or put it somewhere in a safe place that you can get access to it. And then a not easy place where Hugh does, where money is difficult to get to. Money's a tricky thing. If it's too accessible, you'll just go spend it if you're not disciplined. If you make it hard for yourself, sometimes you need it fast. So there's like that fine balance, right? Have some of the money that you want to grow or that you're responsible enough to save in a place that's difficult to get to, and then have enough on hand in cash to use when you need it.
Awesome. And my 1 or 2 takeaways is pay attention, right? Actually ask, go look, right? Maybe you've never looked, just go look.
Yeah.
There's no reason they should be charging you minimum fees, and also don't be in a rush. So pay attention and don't be in a rush.
And set up Overdraft for 95% of the things that you do.
Yes. Yeah. So if you can just pay attention and then not be in a rush, you can eliminate most of the fees and shop your banks around. The banks have no loyalty to you.
Yeah.
You may as well go for who's going to give you the best terms. I personally use Ally Bank as an additional one that I never check as my emergency reserves. But if that sucks one day for a high yield savings account, I'm going to go to a different one. I use Yada. Yada is another one. And so just pay attention. So that's it, guys. We will see you next time. Remember to F your money.
Hey, everybody. Thank you so much for tuning in. As always, Hugh and I really, really try to deliver value in these episodes. So if you learned something, you thought something was funny, you enjoyed a guest, please hop on to wherever it's being hosted, whether that's Spotify or Apple, and drop us a 5-star review. If it's anything lower than that, email us separately. We may or may not respond, but at least all of the things that we did right, let us know. And truly, if we did anything wrong, or if there's guests that you want to see, we aim to please, and you just want to be a guest on the podcast, how can they get a hold of us?
If you want to be a guest or ask us any questions, you can email fumoney@hughcarnahan.com and let us know. Again, we read every comment that comes our way. We actually have 2 or 3 super exciting ideas for shows that have already come our way. Again, we appreciate everything, guys. Remember, real quick, we are not experts at anything. It is not financial advice. Make sure you do your own due diligence. We are for entertainment and educational purposes. Don't listen to random strangers on the internet. We hope to share our message to get as far as we can to normal, everyday folks, blue-collar folks, military folks. This is information that all of us should have. And so if you liked it, please share it. Guys, we will see you in the next episode. Woo! Woo!